money is your mistress. If you don't look after her every day, she's going elsewhere. The biggest misconception about money is people believe that a high income means more wealth, and your spending is far more important than you're earning. We have got to talk about money. It is part of life. Anything you do has money related to it.
If I came to you like, Racha, why should I trade?
There's absolutely nothing easy about trading. You've mentioned something which I think is the most important trait you need to have if you're looking at trading or investing. And it is the most difficult thing because you can't teach it. You'll get burned sometime throughout and you'll learn the hard way.
You always, yes, you always do.
You'll learn the hard way.
Because I won, let's say, 1 or 2, 3 times in a row, let's say, in my head I'm like, it's easy.
The markets punish ego. They don't punish mistakes, and just makes you panic and make emotional decisions. And again, that becomes gambling. And it's the escalator up and the elevator down.
Racha Alkhawaja is a seasoned trader and investment strategist and was selected as one of the top 50 most influential women in finance in the Middle East by Financial News. As the managing partner at Gate Capital, she brings over 20 years of experience in the markets and across multiple leadership positions in finance. In this episode, we break down the realities of trading versus investing, the biggest mistakes beginners make, how to manage fear and greed, and why financial literacy, not capital, is your secret to financial freedom. Hello, everyone, and welcome to the first episode of the Not Just Money podcast by Handtech Markets. We're kicking off with a banger of an episode today, guys. We have a very special guest with us to kick it off. Please welcome to the show, Miss Racha Alkhawaja. Racha, welcome to the show.
Thank you. Thanks for having me.
Thank you so much for your time. We really, really appreciate it. So, Racha, me and you, had a call last week, and we were learned a bit more about your background and your story. And you've been a trader for 30 years, which is perfect for us because we're a trading platform. And what I wanted to do today to kick off our conversation in the podcast is to understand, get a deeper insight about trading. There's so many strategies. There's so many people will tell you, do this, buy this, invest in that, but we're not going to be talking today about what to do in terms of that, but more about the mindset, the strategies, learning from your experience. You've been doing it, mashallah, now for 30 years. So, but before we get into all of that, Racha, why don't you give all of us a little bit of background about yourself and we'll take it from there.
Right. So I've been in investment banking 30 years now.
Wow.
A little bit, getting on with it. I started my career as a repo trader at PaineWebber in London. So I was on the trading floor for a couple of years there, and then moved to Lehman Brothers where I traded fixed income. It was actually swaps on the fixed income desk on the Russia and Turkey geography. And then from there, I moved onto FX at State Street. I was there on the FX floor. They're a very large FX player because they're the largest custodian in the world. So it was a big floor. I learned a lot there. It was amazing. It was really amazing. And about 5-6 years onto doing trading floor work, I decided I'm kind of getting burnt out a little bit with the hours. I was on the floor at 6 a.m. leaving, I don't know when, sometimes at 10, 11, 12.
So when you're on the floor, is that like what I see in movies and stuff? Like you're there getting calls left and right?
Because that's back in the 90s,
Okay.
And even at PaineWebber, this is the 90s, everything was paper trail and there was screaming and shouting. And it was just exactly like that with... obviously very male dominated, of course. There was hardly any woman at the time, but I didn't know any better. These were my first jobs. And I loved it. The energy is amazing. You learn how the world works very much. Yeah. And then moved from there onto electronic trading. I was at the starting of Tradebook, which is the electronic trading platform of Bloomberg. I ran that for 8 years. I ran the hedge fund book. And then... with time moved more into asset management and now in private equity. At Gate Capital, we do private equity and M&A transactions, investment business, investment banking advisory for the region. So kind of still in investment banking, but on a different level. I still trade. It stays in your blood. Once a trader, I think always a trader.
Is that how it works?
So that is how it works, yes. So it kind of stays with you, and it's something that I love. And I think even besides loving it, it's very important. It gives you a very deep understanding of why other things are happening in the world. The
Okay.
markets move every sector in the world.
Yeah.
In any industry you may be in, it will be affected on how the markets are moving. So it's very important to keep a grip on understanding how things are moving and why they're changing.
No, of course.
Yeah.
And to your point, so funny that you started on the trading floors, like, because I've seen those scenes in movies, and I'm like, is that actually how it was?
It's super
and whatever.
fun.
It seems
It's super fun.
like high stress though, like just
I can't
loud
tell you how
and-
much fun it is.
Yeah, I'm sure.
And then back in the 90s, and I'm not much allowed to say all of this, but because there wasn't all the PC, the politically correctness that exists now, it was even more fun.
Okay.
Because they were playing pranks on each other.
It was a bit,
we're there.
it was a bit looser.
Yeah, and
yeah.
we're there for hours and hours of the day. So you got to make it a little bit more fun.
gotta-
Because otherwise, I mean, you're with the same gang
Yeah.
all day. It's a big floor and
Yeah.
it's very stressful. The environment's very stressful because
Yeah.
it doesn't matter how good or bad you are or what, you're a P&L. How much have you generated
Exactly,
at the end of the month, year, whatever it is. So it's a very highly stressful environment. And so you got to make it a little bit more survivable.
Sure.
So it was fun. It was super
Yeah.
fun. And you make really good long-term friends. I have friends I still talk to that were sitting next to me.
Oh, that's awesome.
And a lot of it is what do you make out of it? Because sometimes most of the time on the trading floor, you don't actually know the person next to you. If you don't make an effort to speak to them and try and find out what is it that they are trading or what are they doing, you might be sitting there all year and not knowing their name or not talking to them. Now, if you're in a particular department and they're segregated, fine. But if you're not, and on the prop floor, everybody has a different book, and you might not necessarily know what the guy next to you is doing or who he is, unless you make an effort to speak to them.
Yeah.
So, they were very large floors. Like in Lehman, the fixed income floor was a full economy by itself.
Wow.
We had food trolleys come in, the shoe shine people come in. I mean, it was like it's a full economy. You're sitting there and everything's arriving, and there's a lot going on, a lot of screaming, a lot of shouting. But it's super fun. It's so much fun.
So one thing, so before we continue, guys, for the people who don't know, Racha is also, Racha's been in finance for, as we've been talking about for 30 years, but she was also voted top 50 most influential woman in finance in the region. And you're actually, I know that you're one of the first women actually working on the trading floors at Wall Street at the, to your time at the 90s. What I wanted to do, Racha, to set our conversation for today is this. If I came to you and I'm like, why should I trade? What's because a lot of people, I think growing up, I never even thought about trading, right? I would see people like yourself, on shows and stuff, and I'd be like, oh, that's a world that, I'm not a part of. But obviously when crypto came into the picture, everyone became interested in this concept of trading, right? Now, I know trading has changed a lot over the last 30 years from a compliance perspective, tools, technologies, the speed of it. But before we dive into all these different areas and how things have changed, I want to start, if I came to you like, Racha, why should I trade? What are you going to tell me?
Okay, so there's a few things that I think are important to note where trading isn't an easy thing to do, like it may sound, or there's all these things going on in the market. That's easy money. He got it through trading. There's absolutely nothing easy about trading. And I wouldn't ever advise anyone to jump into it if they've never done it. They need to spend time learning, understanding, watching, and understanding behavior, psychology, market timing, looking into the data, understanding how to analyze data, and follow the markets for long enough to first try and see if this is something you should jump into. Two, where is your interest and what do you think your risk appetite is, to try and understand which product suits you most. Is it fast-paced? Is it slower-paced? Is it higher risk? Is it lower risk? What is it that works with your risk profile and your risk appetite before you even consider, let me just trade? Because I think this is one of the things that maybe also I'm sure we'll touch on, is trading versus investing.
Yeah. Are they the same thing?
They are not the same thing.
Okay, there we go. See,
they're definitely not the same thing. There is a time component. So trading is always, people look at it as a faster pace. So if I'm trading, it's something I'm doing every day or every week, etc. And it's a shorter term activity, while investing is a longer term activity. That's how it's looked at.
Okay.
But in fact, not necessarily. I think, and at least from my perspective, you have to look at two things. One, the science, and one, the emotions. So the art of trading. So one is the science behind trading, where you need to analyze the data. There's a lot of data, and we have a lot of tools today, and a lot more tools than when I started. And that's great. But this is your science. So you need to have a conviction. I study equities, I study fixed income, I study derivatives, I study commodities. I look at them, I analyze all the tools I have at my hand, which could be, I don't know, moving averages or Fibonacci, or this, and these are the old ones. There's plenty of new stuff to look at today. And that gives me a conviction that I think there's value here. I then have to decide, when do I execute this conviction?
The timing, right?
The timing, market psychology, is there momentum? Is there some macro event happening that this isn't the time to be touching this particular product sector? Or so there's a lot of things to take into account. On top of all this, there's the emotional side of trading, which is huge. And if you only go by the emotional side, which is what a lot of people perceive today as trading, that it's emotional. I like this, I hear it's going well, I should jump into it. That becomes gambling. This is no longer trading. So even trading, you need to have a set of analytical tools that you've studied very well, and then decide to maybe take a shorter term view, as opposed to investing, where you're taking a longer term view. Although emotions will sit with both in terms of your exits, your entry, etc. So there's a lot of complexities that come into this. It isn't I'm hearing everybody's buying crypto and let me just jump into it and then you burn yourself. You can, you might not. There's probabilities of everything, but it's no longer trading or investing. Now we're punting.
Yeah. No, so when you were talking about it, I was just reflecting on my unfortunate trading experience. So I definitely was gambling. I FOMO'd into, my first trading experience ever was I FOMO'd into crypto back in 2020, and I'm a very impatient person, and I'm also, what I learned through that experience is I was a lot greedier than I thought I was. Because you get fed all these multiples, oh, this guy made 50x and this guy, whatever. Yeah. I'm like, I'm up 20x right now, but nah, for sure it's going. And then I was also doing leverage trading, 10x, no stop losses.
Oh gosh.
Yeah. There you see, everyone I've told this story to, every expert trader has a background in finance is like, you're just gambling the money. You know?
Well, look, this
is the problem.
Yeah. Though. That is because there's no, I think many don't take the time to actually study this and understand it, and understand their downside and their upside. And you've mentioned something which I think is the most important trait you need to have if you're looking at trading or investing, is patience. And it's so hard. Greed is another thing. There's a lot of things we can talk about, but patience is the name of the game. And it is the most difficult thing, because you can't teach it. It's very difficult to contain. It's very difficult to persuade a client who is losing money, or yourself when you're losing money, that you need to be patient, because your world's crumbling and you're thinking, what is he talking about? I'm burning, and the emotions run high, and it's very, very tough. And it is the most important trait to have. You need to be very disciplined in trading and investing. Discipline is I can't tell you how important it is to put your parameters and say that's how much I'm willing to risk. That's where my exit's going to be. That's my stop loss, and stick to it. It is much harder than you think.
It is
much harder than you think.
Yeah.
So And this is when all the other things kick in that you're talking about, like greed, etc. And it's look, it's human nature. But if you want to try and actually make something out of your trading habits, you need to be disciplined. You need to breathe and calm down and look at these numbers and think, I know what my parameters are, and I'm going to stick to them. And you have to stick to them. And if you've been doing this long enough, you know it's cyclical. Nothing goes down forever. Nothing goes up forever. Some things do go wrong. You have to stomach a loss. And you have to be able to take a profit when you know this is the level where you would have been happy with a few weeks ago, but today you're becoming a little bit more greedy. Because markets punish ego. They don't punish mistakes.
Oh, I've never heard that.
They do. They teach you this on the trading floor.
Okay.
It's number one rule. Yeah. Markets do punish ego, and they do. And you see it. The longer you've been in the market, you see it. Whoever has fallen, and you hear a lot of stories, it's on ego, it's on greed. People get to a stage where they think they no longer will make a mistake, and then they do, and then it's bigger than they can stomach. So you've got to stick to your discipline very tightly.
Yeah, no, 100%. And what you were talking, so what I learned through that experience is, because I definitely had those days where it wasn't all bad. There were some days that were wins, but because I won, let's say 1 or 2, 3 times in a row, let's say, in my head, I'm like, it's easy. Figure out, double it down. Let's do it. You know, I figured it out. And, to your point, from the people I've researched and watched on podcasts and interviewed myself, the market will always humble you. It does. To your point about like hitting the ego.
They're harsh.
It's ruthless,
And it's the escalator up and the elevator down, right? So. Oh yeah,
okay. I've never heard of it like that.
No, that's another.
Yeah.
It's an escalator up, elevator down, and so you get a pretty quick wake up call on your way down because it's a lot faster than your way up, and your way up because it's slow. It builds greed because it's slow, and you look at it and you think, okay, it's good. I'm on a pattern. It looks good. It looks nice, and nothing's stopping this, and it's all nice and steady.
Yeah.
But then it isn't because nothing is ever one-way directional.
Okay.
So yeah.
So we started at the beginning of this conversation. You talked about a couple of things. You talked about risk appetite. You talked about understanding. You talked about research. You talked about studying the market. One thing that I think people fall into. I think this is, from my perspective, one of the hardest things about investing or trading is this. Investing, I've learned through conversations and through research, is that investing should be low, slow, boring, long-term investing. Long-term, leave it, keep putting some money in, let it grow. Right. The problem with that is if you want to let's say you've convinced me to invest. Great.
Yeah.
I need some wins or like some proof in the short term along the way to keep me motivated. You telling me invest 1,000 now, and in 20 years, I have $1 million, doesn't do much for me. It doesn't really help me, which is why I think then people default to trading, to your point, because it's shorter term, and maybe there's higher returns in the short term compared to, the long term. But obviously, the risk factors differ on both.
So these are two different things, because what you've just described is passive investing.
Yes.
There is active investing.
Okay.
So there is a different way of doing a long-term investment in an active manner.
Okay.
So let's say you look at yourself or a client, and he says, this is my risk appetite, and I like, bonds or equities, let's say, and this is the sector I like, and you analyze it and you look at particular data and analysis, etc., and he has conviction on 2 or 3 names, and he likes these names. Okay. He has a criteria of how much he's willing to risk on these names. So then you look at timing. Where are we in terms of timing? Where are we in the 1-year cycle, in the 5-year cycle? Where are we in the trading range? Where are we in a lot of metrics that you look at? And then you can then do active investing, i.e. we make a decision, let's say, to for a little bit now and then wait because, I don't know, interest rates are going up or going down, or there's some macro event happening in terms of geopolitical or whatever it is that we think might shift pricing. So you keep adding onto your position, and you get to a stage where you think, okay, maybe now it's time to protect my capital. So you do a partial exit, and then on the next cycle, add a little bit more. That's long-term active investing, as opposed to passive investing, which you were just mentioning.
So is that dollar cost averaging what you were talking about? When you take out a bit of profit and then you reinvest it, consistently at higher things?
No, they're two different things.
Oh, okay. Okay, good. This is good to know.
Yes. So if what I was trying to describe is you're sticking to a conviction of names that you like, or products, investment products, whatever they are, and you are actively investing in them. So you are growing your position in them, taking some profits along the way to protect your initial capital.
Okay.
So that if Armageddon, your capital is actually, you're at least back to square one. You're not back to square minus 20.
Yeah.
Right?
Yeah.
So that's active investing. What you were mentioning, that's different. That's when you are coming, when markets are going against you and you're adding more into your investment.
Okay.
To lower your average price, right? That's different.
Okay.
If I understood you correctly.
No, yeah. No, because to me they sounded like the same thing. Because by the way, because my understanding, I could be correct me if I'm wrong, please. Is you take dollar cost averaging, is you take out, let's say part of, let's say I'm up 10%. I'll take out 5, and then when the market, when the price dips again, I'll reinvest that to now have a bigger position at a lower average now, and there's more money invested in. So it sounded like active investing to me. That's why I was.
Yes, it depends. Look, there's many different strategies and many different ways of doing this. Some people will take their capital out to protect their capital. Some people will take their gains out, not their capital. I think I'm going to protect my gains. I'm happy to risk my capital. I just want to take my gains. So that would go into your first point of I'm getting some money out and I'm making something along my long-term investing, active investing, and now I'm getting some dividend. I took some of my profit out and I can go and spend it or whatever. That's taking your gains out. Some people don't do that. They want to protect their capital. It's very different risk appetite. You have to understand your risk appetite before you try and make those decisions. If you want to do what you were just describing, i.e., I've made 10%, I'm going to take 5 out and then reinvest it when it goes down, or how are you deciding 5 out of 10? On what basis? Is this your capital or your gain? This is emotional. This is you saying, I don't know. Okay, let me just take 5 out and then I'll decide. Is it a good time to go out? Is this near your profit number? Is this where your metrics were when you first started? Is it near at least? Or what are you trying to protect here? You're just giving an arbitrary number of, I'll take 5 out because it's half and then I'll decide later. That, you can do that. You can do whatever you want to do. But at the end of the day, if you're not disciplined and following your convictions, you'll get burned sometime throughout, and you'll learn the hard way.
You always you always
do. You learn the hard way.
So you've mentioned risk appetite a couple of times, and I think that's what we started our conversation with. Because what I'm trying to understand today is the different avenues that I need to master in order to become a successful trader, right? So it sounds like it starts with psychology, your personal psychology and risk appetite. But if I come to you like, Racha, how do I know what my risk appetite is? How do I figure that out?
So that really is going to depend on your overall financial situation, I would say.
Okay.
An appetite for investment.
Okay.
Are you more invested in real estate? Are you more invested in your business? Are you more invested in private equity and going long term and waiting 7 years to get, because that's then a bigger return and you're happy to sleep on it? Are you looking, and that's maybe one thing we didn't bring up on the very big difference between trading and investing as well, is the compounding element in investing. Because the longer you stay in the market, there is a compounding element that is very important when you look at it on a long-term view.
Yeah.
So you need to sit and say to yourself, what is it that I'm trying to achieve, and how long do I want to wait to achieve it, and what do I want along the way? There's always a bit of part of your portfolio that you're happy to risk. How much is that? That's your risk appetite. Am I willing to risk 10% of my full portfolio, or 50%, or 5%? And then that portion, you then have to dissect into level 2. What is more volatile? What is less volatile? How much cash do I keep? Which we always say, always keep a buffer, because opportunities always come into the market. In any product, in any sector, there's always opportunities. And they come sometimes when you expect them, sometimes when you don't expect them, but they do come.
Yeah.
And you want to have some buffer where you can take advantage of opportunities.
So when
Does
you
that make sense?
No, that makes no, that makes a lot of sense. The buffer thing makes a lot of sense, not only to hedge against, a bad time, but also so if an opportunity does come up, you can action it and so on. And I think looking at it as where are you financially at the moment and what you're willing to, part with, or, risk, I guess is the right word. I think one thing about trading that I think a lot of people don't realize, and it took me a while to figure it out, is the market is a reflection of like human psychology. And I had someone on the show once who told me, Khaled, there's only 2 emotions in the market. There's either fear or there's greed.
Yeah.
What are your thoughts? How do we start shifting our lens for the people who are not experts in the space like yourself to understand that this is just a reflection of what people are thinking right now?
Fear and greed are a part of the game. They're the name of the game. They are there. That's human emotions, that's human nature, and these are things that we can't deviate from. The whole purpose of trying to professionalize is maybe not the right word, to mitigate these risks are sticking to your convictions and to your starting point, and try and be extremely disciplined. It's very hard, because being disciplined when there's fear and when there's greed it's the small emotion that no one's really looking at all, and you've got to stick to your discipline. So you will look, there's greed, and you think, I know where I said I was going to exit, and you've just got to close your eyes and do that, and it's hard. And I know I keep saying this, but it is a lot harder than it seems.
Yeah.
And fear is the same. Fear misguides your analytical skills and just makes you panic and make emotional decisions. And again, that becomes gambling. You're no longer trading. You're no longer investing. You have got to shut your emotions, be very objective. Don't look at this as it's still paper until you take it out in the market. It's still a paper loss or a paper profit.
Yeah.
And you've got to shut down and look back at what you've written down, and write these things down. And I still do the very old-fashioned writing down what I said I was going to do 2 weeks ago. Mm-hmm. And I'm like, oh, well, I didn't. I didn't stick to that, and maybe I should. Maybe I'm not exactly where I'm supposed to be, but then I'm near. I have to stick to it, and it's not easy. I keep saying that. I'm sorry, but it really isn't.
No, but it
really isn't.
Even from my very brief experience, and I didn't have a system or anything, but the emotional aspect was incredibly difficult.
It's very difficult.
There are times I'd exit a trade and be like, damn, I wish I stayed. And there are times I'm like, thank God, or I should have left early.
Yeah.
Managing the emotional aspect and the mindset aspect is one of the things in trading that I think a lot of people don't touch on enough. Everyone will tell you about different strategies, different tools, different research, I'll give you a whole methodology, but you can't train this aspect unless you do it.
Yeah. But that's why a lot of people resort to passive investing. Then they don't have to deal
with that emotion.
It's not their problem. They put money in a passive fund or in an ETF, and it tracks the market, and then call me in 3 years. I don't want to know. I can't handle this. And understandably, and you won't get the returns as compounded or as high, but you're not going to deal with the difficult part of the greed and the fear and the emotional upheaval, because it is, and the turmoils. And you do see it, especially on trading floors. I see it. They'll come back, if he's lost his shirt on some trade, he hasn't slept in a few days, and it takes its toll on you. And some people can't hack it. It's not, a joke.
How was there, because you've been doing it for so long, so I know you talked about discipline and having like a very rigid, structure of, I learned that you need to start with like, you said it earlier, like a theory in a way. You're like, this is what I think my strategy is. And I need to test this out for a significant period of time to get genuine like insights. But the problem is, at least in my experience, was like, oh, I saw this strategy. Someone tells me, okay, you use Fib 3, you do this, you did stop, I'm like, cool. Then another guy, next video will be like, actually, no, you should use it. And I'm like,
so much noise in the market.
There's so much noise
in the market.
How do you block that out?
I know. There's so much noise in the market. And then the noise is it multiplies when there is whatever event anywhere. Then all of, especially now with social media, it's a nightmare.
Yeah, exactly.
It really is, because there's one reel or whatever about the market tumbling, and then you get 7,000 of them in the day, and because you've watched one.
Yeah, the algorithms are okay.
The algorithms are just feeding
that.
you that, and it has. It's not necessarily true or correct or part of your strategy and your conviction, but it plays on your emotions. And it's very difficult to try and eliminate the noise. So eliminating the noise is another gift you have to have to try and remain in your track. You have to be flexible, of course, because things do change and you need to adapt to new trading environment, or you need to adapt to new world order, new interest rate environment, there's QE, there's QT. You need to adapt to these things. You cannot just stick to what you've decided 6 months ago. You do need to adapt, but within parameters.
Of course,
within your parameters.
Yeah,
that's
because it's trading. The way I look at it is, it's such a frustrating skill. Let me explain. Let me not only from the everything we talked about, from the risk appetite to the emotion to having being disciplined and the strategy. It's a skill that if you master, it will give you to a very certain extent some financial control in your own life, because you have input and power to make those decisions or not. But at the same time, when you look at, you touched on it just now in the sense of things change past geopolitics, sometimes one article somewhere could drop, the stock price or the trade price. So it's such a weird thing, because it's like, oh, I mastered the skill. I have now something I can control in a world that I have almost no control of. Yeah. So it's just, that balance is so tricky.
Look, I think the important thing is it teaches you a lot about how to try not to make bad financial decisions, whether it's in trading or investing or other things.
Okay.
Because it teaches you to understand, to try and control the emotional part of your financial decisions. And even if you don't trade, just understanding the markets and understanding the psychology behind it, and looking at momentum and market, psychology and movement. This is all human behavior. It teaches you how to time other financial decisions in your life.
Okay.
Whether you're buying a property abroad, where is the euro trading today? Do I wait? Is it a good time to be buying? Has the movement been big enough that it's actually skewing my return if it is a property that you're buying for investment? What are the tax implications? You need to understand. It's just you become a lot more financially literate, which is the whole purpose of that, because you do need to make financial decisions in your life on anything, whether you're trading or not. And it's a subject dear to my heart, because I'm growing I'm finding financial literacy is still really lacking in the younger generation, and it's such an important skill because what you need that even if you buy your own first home, you need that. You need to understand your numbers. You need to understand your mortgage. Even if you run your own business, you need to understand your accounting. You need to. Financial literacy is just important, and I know we're moving a bit on the subject of trading, but that's the foundation of when you're in a business, you want to get a loan. What criteria are you okay with? Do you take it now? Do you know where interest rates are going? Do you know? You need to be informed, very well informed before doing all this. So even if you're not in the markets, you need these things for your life in general.
Yeah. And it's interesting that you say that. I never linked the skills of trading to other financial decisions I would make in my life. I think you're 100% right. And the examples you gave, for example, buying a house or saving, it applies to all of it. And I'm so happy you brought up financial literacy because it's not only the younger generation in Russia, it's my generation too. We are not financially literate. I studied finance. Okay, that doesn't mean
that's a whole different.
That's a whole different thing, right?
Different thing.
So I want to understand from your perspective, how would you define financial literacy? And then the second part of the question is, how do I become financially literate? Because I think those two, everyone talks about literacy, whatever, but no one tells you what really it is and how do I become it?
I personally believe it needs to start at home. Because I found the educational system just teaches you theory, and that's their job. Unfortunately, for the girls and the female in the educational system, they are still pushed towards humanities and art. They don't push them towards financial. And I struggled with that. I studied mathematics in university. I was hounded by everybody. Why are you doing this? What are you going to do with maths? You're going to end up being a teacher. This is really boring. And everybody was fighting me on it. And I was like, I don't know what else. This is what I like. So you still have that today. And I have two girls. In school, they were still pushed towards art and humanities and other subjects that are not financial. And that's still the theoretical world in the school. At home, you teach a lot more the literacy. So I often speak to my girls at home about why I'm making whatever financial decision, whether it is buying or selling a house or a car or renewing a loan on a car or buying or selling a stock or making a particular investment that is longer term. And they might, even when they were too young and they didn't understand, it kind of resonates. Whatever you tell them about a decade later, so I don't know how the brain works.
Now it clicks.
They're like, oh, I remember you said that, or I remember you did this, or and it has to start at home, and you've got to make them take part of these decisions because all of us I make them take part in my good and bad decisions. So I do often say, listen, bad time, bad financial decision. This has happened. No, you can't go on that holiday. Call me later. And I'm very comfortable with that. And I do tell them that. And it's good for them to learn that it isn't just the instant gratification that this new generation has. It isn't just, all pink roses. They've got to understand how cycles work and even if I didn't need to do this, I do it on purpose because they need to understand because they're going to have to face that at some point in their life. And I think a lot of it is also doing a lot of research. So, for example, and speak to people. I always say, ask, speak. It is perfectly fine. It is important because if you don't hear other people's point of view, other people that are in the know, or you respect their knowledge, and not one or two. Speak to 5, speak to 10. Take other people's opinions, and then make your own. But do even I do that, and I've been in the markets forever. I still do that. I remember something actually talking about greed. It's a funny story because I had a property in Europe that I sold, and then I made a loss on it. But I decided, okay, I'm not using it, forget it, and I actually took a loss in euro. I bought it in sterling. I was living in London at the time, and then I got the euros, and then I thought, I've made a decent loss on this, but the euro was moving up. And I thought, I'm going to wait. That's patience. So I waited and waited a long time. I waited a few months. And then the euro was nearing parity to sterling. So I was just over break even now on sterling because it's my main, what I originally paid with. So I got to just about to parity, and the whole market, I remember at the time, was just parity. We're going to cross parity. We're going to go, and it was the noise. It was everywhere. And I thought, I'm not going to sell my euros now to get my sterlings back. Although I'm now in the green, I was in a decent loss of 4 or 5 months ago. But I'm going to wait because it's going to go beyond that. And then I called an ex-trader friend of mine because he was still on the trading floor. And
Sure.
I called him and I said, you know, what do you think? Do you think we're going to go a lot beyond parity? Should I wait? I'm debating. And then he suddenly said, you seem to have forgotten your lessons, greed. And I thought, yeah, he said, no, this is not you talking. It's pure greed. Get out. You're in the green. Don't wait any longer. You've done your waiting. You've done your patience. Greed is going to bite you. Just take your money and go. And I thought, oh yeah, because you don't realize it. You just genuinely don't realize it. And then I did. And I'm lucky, I'm glad I did. I don't know if there was luck involved in this. It was a very difficult process.
Yeah.
And I did get out, and it didn't make it beyond parity, and it did tumble, and I would have ended up in the red. So, but it wasn't an easy process. It took months of patience, and it took that reaching out to try and realize what am I doing? Yes, it's greed.
Yeah.
And if you don't speak to people, if you don't process what is it that you're going through and actually name it, you don't realize what's going on. Because the noise was so big about we're definitely going beyond parity for sure. There is no question that you're no longer processing that I'm getting greedy and this is noise. It's very difficult to process all of this. You just think, well, that's what's happening and I'm just going with the flow and everything is how it should be. But it wasn't.
Yeah.
So I always say, reach out, ask. I don't know, you're getting a loan or you're getting for your business or you're getting a mortgage. Ask people, what have they done? Have they found a better deal somewhere? How did they negotiate? What terms are they looking at? Ask, find out what other products are there in the market before you make a big financial commitment.
Yeah.
And financial commitments are all we make every day.
That's
right.
When you bring it up to the home aspect, I never really paid attention to that, like how relevant that was to how I make financial decisions until I got married, to be honest.
Yeah.
Because then when I got married, I was like,
oh, I need to.
Yeah, like not just learn how to manage. It's not just about learning how to manage it. It's learning what's my money mindset, what's her money mindset. And then you go through, as time goes on, you start making decisions together. You start realizing like, oh, you are like this. And where does this come from? It's because you grew up this way. I grew up this way.
Yes.
And that just, I'm using marriage as a small example, but you take that into now the real world and you're having, the discussions you're having with clients and stuff, what to you is, you have best practice, but we're not 100% objective, let's be honest.
No,
there's always an emotional thing that comes with it.
There is.
So if you're telling me, I'm like you're telling me, Khaled, do this, you have to do it now, but my money answer is like, no, I'm more risk averse, whatever. Yeah. It's not gonna work. But I think you need to understand first what yours is. And how you figure that out is where my next question becomes. Because only until my wife was around that I had something that went against how I've been running my life, right? So it touches on your point of asking people and getting out there.
Yes. There is an element of having a hunch that should not be...
Like an intuition.
Yes. That should not really be ignored completely. But it needs to be managed. It shouldn't be ignored. It shouldn't be followed 100%, but it needs to be managed. So if you really have a hunch about something, balance it. Balance that with your criteria, with your parameters, with your risk appetite. Balance it. Don't ignore it. Don't necessarily go after it. Not all hunches are true.
Yeah, of course.
And you do see that a lot coming back to trading. Oh, I know what's going to happen. No, you don't.
Yeah. It's always a prediction, right?
Yeah. And we don't go on predictions. I guess predictions are a tough word to be used. But you do, the more you follow, the more you understand momentum, and you understand the psychology. Some days I'm watching and I'm like, it's FOMO. You can see FOMO. I can see FOMO in the market easily. You can tell there, and this is just like, shut the screen.
I don't want to be a part of this. Yeah.
Not looking at this, because it's gonna fuel your, and even on days where markets are really red and really and everyone's like, you're not even looking at your sale. I was like, no, I won't, because I'm not doing anything and I'm waiting, and I have to exercise my patience. And I know that looking at the screen is going to ignite a lot of emotions that I'm trying to put at bay. And so I'm not looking. And I'm not looking. Cycles come and cycles go. And I don't engage. Because I've learned that for me, that's how I put my emotions at bay, is by not engaging. Literally, the world will be falling apart and I've got Netflix on.
Yeah.
I'm like,
just,
you know what? Tomorrow's another day. Next week is another week. Another story. We'll talk then. I'm not engaging. And you've got to take your mind, put it somewhere else, engage it with, I don't know, a Netflix or cooking or something completely different, to disengage and shut your emotion, because I've made that decision.
Yeah,
I know.
It's
It's a whole thing.
No, but when you were talking about how no matter, even someone like yourself who has 30 years of experience doing this can be influenced.
Yeah,
you know what I'm saying? Like you're not immune to it.
No, emotions don't change.
Yeah.
People have more experience. They are a lot more educated. They have a lot more tools at their hand. But emotions is not something that you know how to control. The older you get and the more experience you get, doesn't work like that.
Yeah. And they always say at the beginning, when you start like down this path, you have a larger risk appetite because you have less to lose, and then as you get older and you have like more capital, you're like, okay, now I'm gonna be even more careful.
Yes.
When you're making like moves and decisions. When it comes,
your risk is a lot.
Yeah.
You want to take a lot more risk when you're younger. You don't have the uni fees, mortgage, that. You're not planning for a retirement and all these things. So you're like, oh well, you know what? I can, because you've got more years to potentially make money,
correct it, right?
To correct it and to earn. When you're in your 60s or 70s and you're in retirement mode, and you're not going to be earning, you can't risk all your pot. Right? Yeah.
What do you say to the people? I'm sure you've had this question for sure before. Oh, Khalid or Racha, I can't trade, I can't invest because I only have $100. I can't do it. I need to have a lot of money so that this is worth it. What do you say to those people?
It's absolutely not related to size whatsoever. And it again, a lot of it is on compounding. So you can start with a small amount, and if you follow convictions, data. Try and minimize the noise and the emotions, etc. You will see a very good compounding effect. I started with I don't know. I think my first trade was in my late 20s, with my own money, and it was they were talking about a particular company at the time, and I thought, you know what. I had, I think, $5,000, and that was a lot of money for me then. I mean, a huge amount of money. There was like, I don't know, salary of I don't know what.
Yeah.
And I thought, well, I'm going to do that. And there was noise about the particular merger, and then the merger did happen. And so this did compound. Within about 6 months, I got 3 times my money. Wow. I took my money and bought my first car.
Hey, okay, you did the smart thing. Okay, there you go.
So I did that. While I could have stayed, because I think this did go on. This did go on a lot higher.
Yeah.
And that's another thing you need to learn.
Of course.
Is this hindsight business. It's painful. It's painful, and it's a recipe for disaster.
Yeah.
End of. That's what hindsight is. Because, I should have, I could have. I knew, I thought about it, and I didn't do it. It just makes people so miserable and makes them almost not even see the progress they've made and the benefits they have reaped because they're looking at hindsight and what I should have done and what I could have done and where would I be now if I did what I thought I was going to do. And that is a killer.
Yeah. And what I've learned also is, to your point, you mentioned earlier that you track like your trades.
Yes.
So I learned that even like you losing on a trade is like 100% going to happen at some point. You know, it's like it's baked into this process, right?
Yeah.
So, but the mistake people make, to your point, is they would look at, let's say, in hindsight, like, oh, I should have made that. I should have stayed. I should have left. Wrong time, whatever. The problem there is now I have to not let that carry into my next decision when the same thing comes up, because like you said, the market might be very different now. Lots of different conditions. Has the asset class changed? Like there's so much more to take into account when you're moving forward. But a mistake is not it's not a bad. Being wrong is not bad. Being wrong is just another learning.
It's another blip.
Exactly, another
it's
blip.
A blip. And that's okay. And blips happen, and they have to happen.
Yeah.
And you need to swallow that and look at, what did I do a month ago? What did I do 2 months ago? So I tend to revisit, what did I do this quarter? Okay. So I look back, and you'd be so surprised. You forget. I'm like, did I buy this or did I sell this 3 months ago? Like, I don't remember. Oh yeah, was it that much? But whatever I was going through at the time, I don't remember, because emotions have no memory, right?
Yeah.
So that's another thing. And so, and then I look and I think, okay, so what's happened this quarter? What have I done this quarter? Am I up? Am I down? What did I do right? What did I do wrong? To try and just process how to move forward from this.
Yeah.
And that's important, to revisit your past, your last 1 or 2 quarters, to try and see, how have I moved forward with all the blips and with all the mistakes, and because that's part of life.
Yeah.
And that is a part of being disciplined.
Yeah. And one thing I think I want to mention as well in on the trading aspect is, because you've traded also across different asset classes.
Yeah.
So I know, so you have we've talked about the risk appetite, the mindset, the philosophy. You have to have a system. You have to be disciplined, manage the emotions. Now, when you start looking at different asset classes, do you have to adjust accordingly, or do you apply the same things?
There is some adjustment to be made.
Okay.
There is. Like, FX is super volatile. It's a lot more volatile. It's a lot more taxing. It can move for you or against you in a higher speed. Fixed income is always viewed as a slower moving product, and it is, but also it gives you some cash, right? There's a coupon that's being paid. So it's always perceived as a part of your allocation that is yielding. So it gives you some reward along the way of the ups and downs.
Yeah.
So yes, you do have to shift your mindset slightly with the different products, for sure.
Yeah. And I guess
and derivatives is another thing. Commodities is another
thing. By the way,
thing.
thank you for bringing up derivatives.
Yeah.
So this is my theory. Okay, it's a theory, guys. So I believe, my argument is this. You know, the reason I like why futures and derivatives are interesting to me is because I can play both ways. That's why I like the concept of it. You know, I can play the market up, I can play the market down. So my analysis is that that means I can always find an opportunity. Now, if I'm doing more traditional, you know, buy at X, sell at Y, take out some spot, you know, some spot trading, which is what I started doing with crypto. And it's investing is great because when you take out when I got that money and I took some out and it was in my bank account and like had dinner with it, I'm like, oh, it's real. Yeah. It wasn't just a number, you know, it wasn't just a number on the screen. But I know derivatives is where a lot of people get messed up.
100%.
That's more than anything,
the
right?
leverage. The leverage is super high.
Even if it's just one, even
I know,
at 1x.
but the exposure, because the exposure on an option or a future, the exposure behind it is very large. So you're buying X number, but that exposure is as if you bought 1,000 of that stock, right?
Yeah, but
So
if you use leverage, like if you have like 10x leverage or 3x leverage, right? That's when that applies.
But an
or
option within it is a leveraged. It's a higher exposure than buying the stock,
Yes.
or to buy
Yes.
an FX, or to
Yes.
buy. It's a higher exposure.
Yeah.
And so there's a leverage element within it.
Yes.
Now, the right way of doing this, and that's, obviously something we do on the trading floor, is very difficult for retail, is to do option strategy. So different trading strategies like butterflies, or there's a lot of different strategies where you arbitrage.
Okay.
But that's
That's some like advanced.
advanced.
Yeah,
yes,
yeah,
I mean,
yeah.
you got to have your spreadsheets, Excels open, and all your screens on all the time. So that's something you got to do and can't keep your eyes off it.
Yeah.
But if you're trading just options instead of going to the underlying, it's a higher risk. It's a higher volatility, and not everyone takes that into account or calculates how much more risk are they taking by doing a derivative, while it really should be a hedging tool.
Exactly.
And people are not using it as much as a hedging tool. They're not, which it is.
Okay.
It used to be.
What? Okay, so to your point, so what has changed since it seems like from your
The
perspective it isn't
markets
so
are
much
very
anymore.
deep. I mean, in Europe and the US, the markets are hugely, the liquidity is huge, and they've become trading instruments by themselves now. They're no longer just a hedging tools, which what they were initially designed to be.
Okay.
Yeah.
But there is everyone I've spoken to when it comes to trading, and I tell them about that theory I just told you, like, oh, I can play both sides of the market. People who have been doing it for a while always tell me, like, forget about leverage, okay, until you have at least a good solid amount of people like experience in this space, because to all the things that you just talked about, there's so much more that I need to take into account. And if I don't have these trading fundamentals that we've talked about today built in, I'm probably gonna like crash and burn.
It accelerates your leverage.
That's a good way to put it.
Yeah, it accelerates everything. Accelerates your profit and it accelerates your loss.
Yeah.
So, and because it does accelerate your profit, the greed element comes in, and everyone wants to do that. But it really accelerates your loss. And remember, the loss is elevator. It's not escalator. Because it's elevator, it's even more compounded. And so your loss is going to be faster and much deeper than your profit.
Yeah.
And all things equal. And so that is where people are not calculating that before getting into leverage. You got to calculate that.
Yeah.
So if I lose 20%, if the market loses, I don't know, 10% in a week, okay, with this leverage, where do I end up? Look at that number.
Yeah.
Calculate that number. Look at that number. If that number is too scary, decrease your leverage, or don't take it.
Yeah.
We always would say start taking leverage when you've got a good buffer on your capital. So you've invested, you've done it slow, you're moving slowly, you've compounded, you've now got a semi-healthy buffer of some profits. Then start to take it gradually, very gradually.
Yeah.
But work on a buffer. Don't just jump
into it like straight up.
Yeah.
And that was my mistake, just speaking honestly here. That's literally what I did.
Yeah.
I'm like, if I goes up 1%, I'll make 10%.
I'll make 10.
And then you get that message, you're like, you've been liquidated out of your position. I'm like, I wasn't doing it with much, like $100, $200, but it was, the way I looked at that experience for me is it was a life lesson with a very small amount, Young, learned my lesson, did what I needed to do.
But again, I think more importantly than we don't want to be, it's not good to lose, no one likes it, blah, blah. But it's what you've learned,
of course,
and that is going to make you think twice before you do any other financial decision. And I think it loss teaches you, well, one, humility, humble, but
Yeah,
it teaches
big time,
you
big time.
to actually give it some time to
Yes.
learn, to try and make any financial decision
100%.
on any asset class.
100%.
And I think the importance of financial literacy, what I'm finding today is people are not taking the time for it. And so they're not spending enough time to understand their cost, their revenues, where they're making money, where they're losing money, what can they improve, and all of these things. They don't do this analysis long enough, often enough. And so they're not managing all their financial decisions properly. I mean, you need the tools. The markets give you confidence. They give you an understanding of how the world works. You understand where things are shifting, timing, etc., and all of these things. Great. How do I then translate that into my own personal life? And how do I make sure that I look into my ins and my outs properly to manage? People don't manage. Not on a daily, definitely not even on a weekly.
Yeah.
And I know people just don't. They put something, they forget it. You take a mortgage, I'll look in 20 years.
Yeah.
No, there's other new products on the market. Have you looked at it?
Yeah.
I know it's been 4 or 5 years, but other products have, they could save you that much, or they could. Do you manage your money, or you don't, or you just like take it? Okay, I'll look at it in 20 years, or
there you go.
That's
that is a big problem.
That is a big problem.
For
It's
sure.
I don't know, it's a saying. I'll tell you a funny saying. We always said, and on the trading floor, they always teach you, money is your mistress. If you don't look after her every day, she's going elsewhere. And that is the quote
That's very
that
true.
we always get told and reminded of.
That's
if
true.
you don't look after her every day, she's going elsewhere.
Exactly.
And it does go elsewhere.
It does.
If you don't look after it, it's going elsewhere.
Yeah.
So,
And I think to your point, one of the biggest challenges to this point is we're just being bombarded with get rich quick,
the
game changer trade to make you this. And the world has obviously become so much more short-term gratification than long-term, which just messes with your head when you're trying to plan for the long term. I think what you talked about at the end there was, that analogy is fantastic. But how do if I want to actually go down this path, and this doesn't just apply to trading, I think if we take a step back, we're talking about financial literacy, we're talking about building the right finance habits, like healthy money habits. I don't know what that looks like, in the sense of because I think it's also a skill, right? I think it's like a muscle that you need to train consistently, and the more you work on it, the better you're going to get.
It's a work in progress for everybody. It's a work in progress. It's a constant evolution of reading, learning. I still learn. There's some things I look at and I'm like, I'm not really sure what that means, or I don't understand how that happened. And so there is no end game to this. It's a constant work in progress. And you've got to remember, choose your hard. It's hard not to learn, but it's even harder, to be in the markets and not to be involved. It's hard to learn. It's harder not to have the knowledge and making all these mistakes constantly.
Yeah.
You've got to choose your hard. It's very important to. It's not pleasant and it's not easy. Fine. And it's not something you're going to learn today and then it's with you forever. It's a constant work in progress.
Yeah.
We have got to, and the world's changing around us, as you say, at a very fast pace.
Too fast.
Too fast.
Yeah.
I mean, even for me, I'm like, this is like, I don't know what the hell, things are coming left, right. I'm like, I don't know what that is. I don't know what is happening here. Oh, hold on. And the tools are so many now.
Yeah.
There's way too many tools. So even when I look, I'm like, oh, I've looked at this. Oh, I forgot this tool, that tool. I didn't look at this. I didn't read that. I didn't read that report. It's a constant.
Yeah.
So, for a long time, everyone used to say, you don't watch a lot of movies when we talk about. I'm like, no, I got to read.
Yeah. No, 100%.
There's a lot to manage and a lot to read. And life is moving faster than it used to be. And
100%.
And so you got to try and catch up. Now, we can't completely catch up, but then you've got to
do the best you can. right?
Right.
But one big thing that I've taken away from our conversation today, Rasha, is this. And one of my guests mentioned it to me, and she's like, Khalid, no matter if all you did is study, is like you're just a person on the sideline. You're not a player in the game. Like you, to learn and to really develop these things, you need to be an active player in the game. That doesn't mean invest crazy money. That doesn't mean that. But it's always a work in progress, you have to consistently be taking action.
Nothing
to do
teaches
that.
you like a mistake.
Thank you very much.
Nothing.
And a financial one, you'll never forget. That's
You'll
why I
never
still
forget.
reference it now.
The emotions that come out of you, you will never forget.
100%.
And that's the only way to learn.
Yeah.
And I'm a big advocate of that. I'm like, oh, you lost, good. You learn next time.
There you go.
You learn. And it doesn't mean you won't do it again, but you will learn to manage it better next time. Well, one, manage your emotions. Two, manage the quantity.
Yeah.
So that it doesn't burn you as much. But it's a very good thing.
Yeah, I completely agree.
It's a good thing.
To round off our conversation today, Rasha, I just have a few more questions. I wanted to touch on this because I think this is an important one to talk about. I think we are not taught on how to have a healthy relationship with money. I don't think we were ever taught that. I'm going to speak from personal experience.
No, I know.
You know, and
no, you're right.
The problem is, to your point, when you learn it later, it's more costly, right? And a lot of there's a lot of young people entering the financial space, entering the trading space. From your experience over the last 30 years, what's one big misconception people have about money that you've learned?
In my view, the biggest misconception about money is people believe that a high income means more wealth.
Okay.
And I think that is a huge misconception. And I always teach this to my children, and I repeat that, and I think it's very important. It's not only about how you earn. More importantly is how you spend. And I've been around long enough to see earners in the 7-8 figures who end up in debt. They have not been taught or haven't learned how to spend. And your spending is far more important than your earning. Far more important. So you'll earn $1 million if you're spending $3 million. Okay, if you're earning $1 million and spending 100,000, you call me in 5 years. It is how much you are spending, and controlling the spending is just as important, because everyone's always like, running after how much do I earn? How do I speed up my earning, whether in investing or trading or this? How are you managing your expenditure? That's where the difference will show in a decade.
Yeah, 100%.
And I think that's one of the biggest misconceptions I've seen across repetitively. Yeah,
and I think that's a big one. I've heard that too. My dad always tells me, he's like, okay, you made like X amount more, right? But did your lifestyle stay the same, or did it move up, right? So if it's moved up, that margin or that difference or that buffer that you had kind of disappears. To your point about, if I'm making $1 million and spending $3 million, like what am I doing here? And I think another on the misconception part that I want to touch on is that people always say like, oh, money doesn't buy happiness. True, fine. But I had a guest on the podcast that told me once, like, yeah, fine, okay, it doesn't buy happiness, but without money, all your problems get doubled. You know what I mean? If there's a problem you can solve with quickly with money, it's not a problem.
100%. 100%. I don't like that saying. I just think it's very meme, shallow.
It's
like
cheap.
I don't know what message is it supposed to tell you? I don't know what it's supposed to tell you. Actually, I find a lot of the older generation, at least, they used to not talk a lot about money because there is that cultural thing.
There's that cultural
thing
sure.
that we don't talk about money, and money is not something we talk about. I think this is a disaster in the making.
Yeah.
We have got to talk about money. It is part of life. Anything you do has money related to it. Anything, whatever you're doing.
Yeah.
And it is a tool that needs to be taught very early on in life. How to spend. How to spend. How do you save? I was always being told at home, your first salary, half of it, put it in saving. Do that, do this. And obviously half of the time I didn't listen. And then half the time I started to listen.
Yeah.
And then like you say, when you're looking at buying your first home, all of a sudden you're like, oh, where is that savings account again? What's in it? Oh, okay. Okay, maybe now I need to start, managing this properly. Yeah. You can't just sit and say, does money solve problems or it doesn't? I don't know what that means. Money is a necessity and it is there, whether we like it or not, whether you need it to live or to educate or to help or to give to charity or to support someone who's sick or for medical or whatever it is, you need it. It's part of our life. I don't want to know if it gives me happiness or it doesn't, because it's something that I have to deal with on a daily basis. Yeah. I think that just defeats the purpose of talking, relating it to happiness or not.
100%.
And it doesn't help then try and understand how to deal with it properly. You have to learn how to deal with it properly.
Yeah. I think that saying...
So it doesn't leave you and go elsewhere. Right?
There you go. That Mr. Thing's going to stay with me. I'm going to repeat it on so many more podcasts now. But I think where that saying comes from is, so we talked about, just because you have a high income doesn't mean you're going to build wealth. And the issue with that statement, but where that statement comes from, in my opinion, is that unfortunately, we are also geared to associate money and worth. So when you say money doesn't buy happiness, it's to counter that notion that we're being geared to. Yeah, you know what I'm saying? Because that's also not true.
No, it's not.
Right?
And life has become a lot more complicated than that. I think we've also learned that the hard way.
Yeah. COVID was a big slap. Yeah.
A lot of things you're learning the hard way, and that we've definitely learned the hard way as well. Yeah. But no, you're right. It isn't. No, it is maybe there to mitigate that thought that we have about money is your worth. Yeah. Which is sad, really. But
yeah.
But regardless of all of this, these are tools you need to learn.
Yeah, 100%.
You do need to. For me, it's as important as eating and drinking.
100%. Yeah, if only that was put in the same regard. How to eat with a fork and knife. Learn how to manage your money, right?
You didn't want to be growing up in my household then, because I'm like, you need to learn this, you need to learn that, and they're like, but I want to be, I don't know, a jewelry designer. I'm like, and how are you going to run your business? How are you going to know what shipping costs, or how you need it? Yeah. It's just it's nothing you can get away from.
100%.
And and it's great now because there's a lot of platforms that have research built within them, even if you're not trading, even if you're doing passive and you're just putting some savings in ETFs or just anything that tracks the market. These platforms today, there's so many of them, and some are really good platforms where you get research or you get reading articles, etc. Read. The more you read, the more you know that point of view. Read all points of view. I read a lot more in what I don't believe in than what I believe in, because I don't need to be convinced.
You're fueling my I already believe, right? Yeah, I need the opposite.
I need the opposite, and I want to see what is going on out there, because that's the market. There's here and there's there. I want to know what's going on out there, and then that gives me enough information to then, when I look at trends, I think, okay, now I understand a little bit more what is happening, and it helps me make some decisions.
Yeah,
you've got to read.
Yeah, 100%. And we all, to your point, we all have blind spots.
Yeah.
And unless you see the other side, or that friend of yours who told you get out,
honestly, and
sometimes you don't know. Right?
And it's funny you say, because I honestly remember calling him and I'm thinking he's going to tell me, of course and he was like, you've forgotten, because you haven't been on the floor for a while. This is greed. You now got onto that step.
Yeah.
You're in that phase.
Yeah.
And I was like, oh, yeah. And I just didn't realize it. Yeah. I so didn't realize it. And someone needs to tell you, because you're all wrapped up in your own emotions, right? You're not looking at it objectively. But
100%.
Yeah.
Rasha, to round off our conversation for today, but this has been fantastic. There's so much amazing information there for anyone who's either a current trader, an investor, for the young audience. This is the conversation they need to listen to, because we're giving them the reality of it, not all the shiny bells and whistles. This is what it's actually all about. So the name of our podcast is called Not Just Money. So we have a not just money question to round off our conversation for today. If there was one skill right now that you'd love to learn that's not about finance or anything like that, just a skill that you'd love to learn, what would it be?
I don't know. A skill not about finance, or I'm a mathematician with an MBA. I don't know. I don't know a lot of other things. A skill that I'd like to learn. What, like a sport? What, like what?
Could be anything. Anything.
I don't know.
Cooking, sport, this, that, anything.
Oh my God, that's really terrible that I don't have an immediate answer to you. Isn't that is not okay?
No, not at all.
I don't know.
Okay, that's also fine.
I just don't know. I'm thinking I do cook. I'd like to be a better skier.
Oh, see, there you go.
Yeah, I ski. I ski well-ish. I'd like to be a more confident skier. How about that?
Well, that's fine. Of course. It's again, it's a skill that you want to learn. It's totally up to you. There's no right answer to that question.
Yeah, no, that's actually, I've got to think about this.
Yeah.
I need to find other things that I want to improve.
There's always going to be something.
There's always going to be something. I used to play tennis, now not much. Yeah, my knees and stuff, but maybe ski. There
Maybe
you go.
ski.
I'm gonna become
Well,
more confident.
You heard it here first, guys. Radesha's going to become a great skier. All right.
I'm gonna do the Olympic runs. Yeah. My girls are doing slalom, so they keep telling me try that. I was like, no, not happening. Yeah.
Sometime, once upon a time,
Yes,
maybe
exactly.
even myself included. By the way, that's no interest to me.
Yeah.
Radesha, I want to say thank you so much for your time today, or for
thank
coming on the
you.
show. This was an absolute banger of an episode, and what a way to kick off, the first episode of our podcast. Thank you so much.
No,
It's
thank
been
you
an
for
absolute
having
pleasure.
me. Really, it's amazing. It's been great. Thank you so much.
Thank you so much to everyone listening. Thank you guys for your time. We know you took some valuable information from this, and we will see you on the next episode. Take care. Thank you guys for joining us on another episode of the Not Just Money podcast. If you haven't already, I'd like to invite you to subscribe to our YouTube channel and follow us on socials to continue watching industry leader talk about the mindset, tools, strategies, and share the money truths that no one teaches you. And remember, guys, when it comes to money, it's not about flex. It's about freedom.